So before I get started, let me just say that all of this training is going to be great. It's going to teach you how to close, but nothing matters unless you have appointments set throughout the week, okay? Because you're not going to, like Samir said, you choose to learn, but you also choose to set appointments, right, guys? So, and...
Sure.
Thank you. Okay, so the first thing that really made a difference in my closing ability was this book right here. Write this down, buy it. I don't know how much it is. It doesn't really matter because it's going to make you a lot of money too. So just get it, right? And when I say buy, I don't mean borrow from the library. I meant buy. Like go purchase it so you can highlight it and everything. So thank me later for that. But let me go over the steps first so that you understand what's in our brains as closers. So when you go and present, the front parts of the presentation are really just to establish credibility. But once you get past the house, the financial house, where you see the four priorities that most families have or concerns, the main goal is to close, but closing means protecting the family, okay? It means protecting the family. I just switched my client story up recently, and the last appointment I just had was with Myra in the field training her. And the story that I have you guys can take, but I had a husband and wife reapply in February, the end of February, and they were very reluctant because I've been following up with these people for 2 years after they last filed. Most people would not be that consistent, but I actually care about protecting your family because I paid out death claims for, right? And it's nothing like seeing somebody in a bittersweet way where you can help them with the financial part of it while they're going through financial, turmoil, right? Or sorry, emotional turmoil. And so the end of February, I wrote the policies up. The wife did not get approved yet, but the husband did, right? On the spot. I put a 10,000 child rider on each of them. The very next month, the end of March, the child passed away. They have 11 kids and the 11th one passed away. And it was very sad. And also, and this is crazy because some of your clients are thinking this too. She didn't even bother to call me because she thought we wouldn't pay out because the policy had only been enforced for less than a month. Think about that, right? That's what the industry is doing to people. So she was so used to hearing those stories, she thought we were one of those. And no wonder why she didn't want to apply and pay money, right? But we put in a claim. Primerica honored that claim, but not only that, her personal policy got approved 2 months later in May, and they honored that too. Give it up for Primerica, right? Money right now, so her other children can have some. But let's start with this page right here. In the presentation, this is what we start closing, okay? Meaning you start asking questions to find out data, but how much coverage do you currently have? So Peter and Tia, how much coverage do you currently have?
500,000.
500,000. Okay, great. So we're gonna do no coverage today, but let me just give you guys some tips. Now, step number 1 is find out the insurance situation. So if they have coverage, then you want to find out if it's cash value or term. Then you want to find out if they're attached to their agent or company, because that's a different type of close, okay? You're not fighting them thinking that insurance is important or not important. You're fighting the agent. You're fighting the company they're attached to. But if they have no insurance or group insurance, then we'll talk about that today. Step number 2, again, if this is a no insurance situation, which we're going to go over, you want to break down the types. Now, I know Shondell and some other trainers go through different orders, but they're not very different. Take the best and leave the rest. If what you're doing right now works, keep what you're doing. Don't just switch up just to switch up, okay, you guys? Just kind of put that out there because some people, they hear something great, but what they're doing is already great. So if you're getting results and your trainer's getting results, follow your trainer. But first, I destroy group insurance no matter what, whether or not they have life insurance through their job or they don't have life insurance through their job. Okay, why? Because if they go through the close with you and you wrote them up for $80 a month, right? And they go back to their job and their stupid, silly coworker goes, "Oh, why would you pay $80? We pay like 8 cents, for $1 million." They're gonna be like, Peter, Tia, this is too much money. Like, I could just pay 8 cents through my job. Stupid, right? But you get what you paid for too. Remember that. So you want to destroy group. You only have one chance to destroy group. Destroy group. Second, destroy cash value. And then third, destroy terrible term. Because we are the only company that offers term 100% of the time. There are other terms out there that are cheaper than ours. We're not the cheapest and we're not the most expensive either, but we do have the best quality, and that's the most important to you guys or anybody that actually wants to protect their family, isn't it?
Yes.
So then you go to Primerica and you sell quality, not cost, right? That's why I share stories, because stories sell, facts tell. So once we get past all of that and we figure out why they don't have private coverage, right? They tell you the reasons, and I'm gonna go over the whole script so this can be recorded, but this is where you wanna get into calculating how much coverage they need. This is where you collect data, okay? So how much do they have saved? That's what I wanna know. So if Peter and Tia go, hey, we have 50,000 saved, right? I'm writing that down. This is important. You write it down. Have a notebook next to you. I also want to figure out how much debt do you have, right? If they have 350,000 of debt, including the mortgage, right? I'm writing that down. If it's education important to cover, what are your kids' names again, right? Peter and Tia, what are your children's names again?
Liam, Lily, and Noah.
Lily and who? Noah. Noah, is there anyone without an L? Why did you leave it?
I know.
All right, why? If you guys see their faces, and I wish you guys could see their faces, because whenever parents say their children's names, they smile, right? It brings the walls down, so that's why you want to do that. How much are their bills per month? Okay, how much are your bills per month? Okay, 10,000, okay? So these are obviously not their accurate numbers, I'm just putting numbers out there. But then I repeat the numbers on a calculator for the client to actually see what type of situation they're in, because you're gonna tell me, I'm not gonna tell you. I'm just repeating what you're telling me, right? Then you go into collecting the dollar commitment, put together the certificate of choice as you get referrals. And then show your certificate of choice, those 3 quotes. And how do we show the quotes? What order do we go from? Lowest to highest or highest to lowest? Highest to lowest. Why? Because you start from lowest and you go high, it's like sticker shock, right? You ever walk into a store and you're like, "Ooh, that's cute," but if you look at the price tag, you're like, "Oh shoot, I thought it was gonna be like, $40, it's 120, right?" And then you apply. So let's get to the presentation and I will go through this script. So just kind of follow along these numbers, guys, save, get, etc. Okay. All right, so Peter and Tia, how much coverage do you guys currently have?
500 of that.
Okay, no, none.
No.
Oh, nothing, nothing, sorry.
How much coverage do you have?
No.
Nothing, I thought we were doing the first example. Nothing.
Nothing, okay. And even if they said that, okay, let's say you said 500,000. Do you feel overinsured, underinsured, or not sure?
Underage,
Under, and is it inside your job or outside of your job?
through my job.
Do your job? Okay, so I'm gonna go over employer coverage just in case, I mean, you probably already know how it works, but I have to show Darius how to explain it, okay? So let's pretend that this is your job insurance and that you also work for the state of Maryland. And I'll zoom in so you can see this better, but let's also pretend, Peter and Tia, that you guys have a family attorney. And you take this to the family attorney and you say, "Mr. Smith, can you please review this for me and my family, because if God forbid something happens to me, this is the only thing they can depend on." So the attorney is gonna say, "Well, Peter, Tia, it's good that you guys have something, but through your job, any job, you're not the policy holder, you're not the policy owner. And your job is the one that, the state of Maryland is the one that owns that benefit on the employees. And if they own that benefit, just like if they owned your house and wanted to change anything, cancel or freeze anything, guess what? Right. Mind you, I made them say that, right? Can the certificate be amended? Yes, we retain the right to amend the certificate at any time without your consent. What is the actively at work requirement? To be eligible to become insured or receive an increase in the amount of insurance, you must be actively at work, fully performing your customary duties at your regular scheduled number of hours at the employer's normal place of business or other places the employer's business requires you to travel. If you're not working due to illness or injury, COVID or disability, you do not meet the actively at work requirement. Termination coverage on the earliest of the following: the date the group policy is amended, so you are no longer eligible. or the date the group policy ends. So this is not our client next, guys, but this proves the same point. Boom, then I show the video. Write this down, show the video in caps, show the video. I'm not gonna show the video for time's sake today, but show the video. The button's right down here. And by the way you get good is making sure you go through your presentation before you get in. You don't get paid for what you do in the ring, you get paid for what you do outside of the ring, behind closed doors when nobody's watching you. Okay, so now we just broke down groups. They're like, what? Right? After the video plays, fast forward, the video plays. That's crazy, isn't it, guys? Yeah. The moral of the story is the attorney is gonna say, don't ever, ever, ever solely depend on your job to take care of your family, because when it comes to your family, how much risk do you want to take? None. Can you see why we always recommend you get private insurance so you own it?
Yeah.
Perfect. Now, when you go private, there's only two choices. One is cash value, known as whole life or universal life. The other one is term. And cash value is 8 to 10 times more expensive because it combines insurance protection and a supposed savings, whereas term is just protection, just insurance, like your medical insurance, your car insurance, it's just insurance. And you see one has two components, the other one only has one. That's not apples to apples comparison, is it? No. But the savings inside the cash value that most people think is better, it's not. They can't legally call it savings in the contract, so that's a red flag, isn't it?
Yeah.
So these are very rhetorical questions I'm getting ready to ask you, but you'll know the answer, guys. When you put your money in a real savings account, would you rather earn a higher rate of return or a lower rate of return? Higher. And once your money is in a real savings account, would you rather own it, it belongs to you, you take it whenever you want, or you have to borrow your own money and pay them back with interest on your own money? Yeah. But you know how some families fight over money when somebody passes away? Would you rather your family still figure it out, the money gets passed to your survivors? Or would you rather Bank B says, we don't want your family to fight, Peter, Tia, we'll just keep your money, that way they don't have to fight. Right, anybody being asked these questions that directly always pick Bank A. But when it comes to dealing with somebody who's just a life insurance agent, just a life insurance company, they always try to get you into Bank B, where you pay for two things, insurance and savings, and your family only gets one. It's like buying a pair of shoes and seeing only one shoe in the box. What would you call that? Yeah, and you would never knowingly put your money into an account that way, would you? But if you knew anyone that was knowingly putting their money into an account like that, how quick would you want Darius to meet with them? And that's a referral touch, by the way. Okay? So then I asked them, by the way, have you guys heard about Dave Ramsey or Susie Orman?
Yeah.
Okay, great. We follow them a lot because they're unbiased. They just teach the community and they don't represent any company. So this is Dave Ramsey on Whole Life. And then I press it, let it play. After that, isn't it crazy? Yeah, good thing you guys don't have that. But so what we recommend is always term insurance, just like you saw Dave Ramsey say. And Susie Orman as well, who says most of us only need a life insurance policy for a set period of time until the toddlers are adults and supporting themselves, or until we have time to build up our own assets. But not all term life insurance is created equal. Because if you don't need to pay for life insurance your whole life, do you think any life insurance company would really want to teach you guys how to get out of the need of paying them your whole life?
No.
Right? Listen to what I just said, right? Because if they go to a term, right, at a cash value company, I already overcame that, right? Like Mandy put me in front of somebody who was paying like what, $80 a month, right? For $1 million coverage at, I forgot the company name, but they also offer cash value. They offer universal life as an alternative, right? So I've already killed that, right? We're waiting on the husband's rating to go down, but still, he was willingly able, he wants to pay more for quality coverage. If you present the right way, they'll want to move forward, right? If they're responsible. So would you ever, do you think that companies would really teach you how to get out of the need for paying for life insurance your whole life? No. So that's why they try to convert you to cash value, even if you do get a term through them. And then it's very unaffordable renewal rates. Like at State Farm, or who we call Snake Farm. This is a 20-year term on a husband and wife in their 30s. They have over $1 million each of coverage, and they only pay $128 a month, which looks good until you get into the fine print. After the first 20 policy years, premiums increase significantly and continue to increase annually for both husband and wife until it looks like this. From $1,600 a year to $55,000 a year. Would you ever pay that?
No.
No, and that's how they can get you to pay $10,000 a year for the rest of your life just to get some of your money back at age 100. Crazy, right? So even if you could pay that, they make you reprove your health 20 years later. But what are the chances you'll be healthier then? Right. So with us, we call ourselves a one-trick pony. If you're paying for a show, the pony only has one trick, it better be a good trick, right? So even though we address other financial concerns, with life insurance, we only offer terms, so we have the best term in the industry. We have a terminal illness rider up to 70%. So that means that if you have COVID, cancer, COVID at a high case, which is at the terminal stages, right? Cancer or any terminal illness, let's say you have 100,000 of coverage for easy numbers. 70% of that, Peter and Tia, is 70,000 you can take out to pay for the best medical treatment. Hopefully you don't need that, but sometimes the difference between living and dying is money, isn't it?
Yeah.
We're also rated A+ on AM's Best because we're able to pay our claims, like Darius went over earlier in the slides. And then 93% of our claims are paid within 14 days, 2 days on record. Because we meet your beneficiaries and your emergency contacts to make sure nobody scrambles for paperwork, God forbid something does happen. Because how many times does that happen? All the time. And I've been here for many years where I have a good amount of stories, unfortunately, that I can share now. And the first one being is that it's most recent. You know, I followed up with one of my old clients that had to reapply, but husband and wife both applied. So this was in February. Okay, so we have the husband got approved and the wife did not get approved yet. And the very next month in March, baby passed away. The wife didn't even bother to call me, Peter and Tia, because she didn't think that we would pay out, like other companies try not to pay out so soon. I put in a claim for them anyways, because I know how our company keeps our promises. And we honored that $10,000 claim for the child's passing. But the other crazy part about the story is that in May, her personal policy got approved 2 months after the passing. We honored that claim as well. We're putting some of that money towards investments for her other 10 children. But isn't that a big deal? Can't you see how you should have coverage with our company? Yeah. So, boom, now I just captured the emotion. There's nothing better than an actual story you can share. And when I didn't have stories, I borrowed other people's stories. And I wouldn't say I have a client, I would say we have a client, right? You can say we because we're all one unit. So then they just said, yeah. Yes, they can see how they should have coverage with our company, right? So normally when a responsible family like yourself, Peter and Tia, they don't have private coverage in place outside of their job that they own, usually it's due to one of these following 3 reasons. Either one, you didn't think you needed it. Like, I don't care. We don't care about our kids. I don't think that's it. So we can kind of cross that out. 2, maybe you didn't think you could afford it. Or 3, maybe you never got around to it. Maybe, you know, life happens, you kind of procrastinated just because you're busy, right? That everybody does that. But which one do you think best describes you?
Didn't get around to it.
Okay, we can get around to it today, but is protecting your family important enough where you would be willing to begin setting aside some money each month to take care of this?
Yes.
Okay. And if Darius and I could put together a program for you that is comfortable and affordable, is there any reason you would not implement that program?
No.
All right, great. Has anyone ever helped you calculate the amount of coverage you need though?
No.
Okay, that's the transition to the theory of decreasing responsibility, which is in this arrow at the bottom. So this is how we calculate coverage, Peter and Tia. In the early days, most families have young children, high debt, and little to no money saved, right? So how much would you guys say you have saved up roughly between 401ks, savings, checking account, and cash that will go to your family?
50,000.
50,000, okay, and I write that down. And you said you didn't want any of your debt to go to your children or your brother. How much debt do you think you're in roughly between credit cards, mortgage, car loans?
350.
Maybe 50,000, okay? And you said you wanted, do you actually, God forbid, if something happened to you, would you want your children's, by the way, what are your children's names again?
Liam, Lily, and Noah.
Liam, Lily, and Noah? Okay, great. Would you want to make sure Liam, Lily, and Noah's educations are taken care of?
Yes.
Great. And how much are your bills typically per month?
10,000.
10,000? Okay, so let me just magnify this for you really quick. You said that you have about 50,000 saved up, more or less, but you also have $350,000 of debt, right? You want the education to be taken care of, but you also have 10,000 a month of bills that have to be paid no matter what. Is that right? This is a very rhetorical question on purpose, guys, but if either one of you, God forbid, were to pass away tomorrow, how long would 50,000 of savings last your family? Can you see why we always recommend you have a lot of coverage in the beginning? But later on, if nothing happens, God willingly, your children are grown and hopefully none of them need you financially 30 years later, right? And you should have little to no debt. If not, the mortgage should be almost paid by then. So if it's just you guys you're worried about and you're looking to retire, what do you need a lot of? Money, right? You better have money. So our plan takes your budget and we protect your family from you dying too soon, but also protect you from living too long. We just don't know what's gonna happen first. So that's why we prepare for both. Fair?
Yeah.
Awesome. Now, if something happened to you, if something happened to your car, you would want to replace all of that, wouldn't you?
Yes.
If something happened to your home, you would want to replace all of that too, what, right?
Yeah.
But if something happened to you, either of you, how much of your income would you want your family to still have?
Awesome.
All of it? Okay. So since we'll be replacing all of your income, how much per month each would you guys be willing to set aside? About 50, and these are just ranges I use, okay? You guys use ranges that your trainers teach you. How much, since you will be replacing all of your income, how much per month would you be willing to set aside each to help take care of this? About 50 to 70 a month, 70 to 100 a month, or 150 to 200 a month each, say 150.
150.
150 to 200. So if I put together a plan that fits between 150 to 200 a month each to help you protect your family of 5 and still save, that would be comfortable for you?
Yeah.
Perfect. You have to repeat it back to them. You have to repeat it back to them because if you just take it and it's moving too quick, right? They can always scale back from you, right? You gotta repeat it so that they can confirm what they said was true. They gotta say it, not you, right? So I had them say 150 to 200 because of the quotes I'm pulling up. So now I'm gonna transition into getting referrals and now getting into quoting, okay? So to time's sake, I actually have the quotes pulled up, but when I transition into getting quotes, I actually stopped screen sharing. And I asked them, hey, Peter and Tia, by the way, while I put together these numbers, oh, sorry, backtrack. I just got the budget, the money commitment. So in order for me to give you an accurate quote, I need to ask you first, what are your birthdays? Peter, not to pick on you, but what's Tia's birthday?
August 24, 1994.
Okay, August 24, 94. Is he right?
Yeah.
Okay, good. And Tia, what's Peter's birthday?
September 15, 1987.
Okay, great. And do either of you use tobacco?
No.
Any medical conditions that you take medications for?
No.
No.
Have either of you guys been hospitalized in the past 12 months overnight?
No.
Okay, so I'm gonna put together some numbers for you. But while I do this, did you guys feel comfortable with the way that I presented myself today?
Yeah.
Or Darius?
Yeah.
Perfect. Did you guys feel that we answered all your questions regardless of whether or not you asked them?
Yeah.
Great. And did you feel like you learned a lot of value that other families just need to learn about?
Yes.
Great. The reason why I ask is, and I go into the referral script, right, which I'm not gonna do today, but Darius already has questions in front of him, right, ideally. Now, if your trainee, kind of is uncomfortable asking for referrals, right, they gotta see it a couple times, but most people, they can just go into it. If they just read it, the questions off, and they don't change anything about the questions. It's funny when I say, don't say, do you know anyone interested? But the question reads, who would deserve to hear this education? People just always change it. I don't know why. It's like, do you not know how to read, you know? Like, just read the question. Just read the question. Don't change it. Don't add anything. Don't change it. Read it, right? But everybody does it the first time around and then they learn afterwards, right? But getting referrals is a $10,000 a month income type of skill set, guys. So learn it. All right, so we got referrals. Darius is done with 3, 5, 7, whatever referrals he got. Fast forward back to me. Okay, Peter and T, I have some numbers ready for you to look at. Okay, so this is a sample of a plan that I put together for a family that we helped. So your commitments were 150 to 200 a month. These are each 35-year outlook so that I have time to help you save as well. So on your side, Tia and Brad, I color coordinated everything. Sorry, Tia, Peter. Tia lives a secret life, right? Just joking. But so I'm not gonna go into like detail about how to quote things like that because you guys can ask your trainer about that, but just know that the way that I structure it is easy for them to read and I'm offering a plan, not a product, okay? Because when people sell whole life or universal, they're selling a plan, by the way. That's why people want that, because they want a plan. They want, what if I die? What if I don't die, right? That's what this plan is. So you said your commitments were about 150 to 200 a month each. So Peter, and Tia, the first column, if you guys were to qualify for 600,000 of coverage, right, each, this quote includes a waiver of premium, which means that if you get disabled, you do not have to pay your premiums anymore. We will actually still cover you, even if you can't work and pay any other bills. So we also have a 70% terminal illness benefit on each of them, like we spoke about, that's automatic. And then on Tia's side, I added 10,000 on each child. So you can add up to 9 children, not that you should have 9 children, but be my guest, right? So for that, Tia is 107 for you, and then for you, Peter, that'd be $126 a month. And if you guys just invest some part of the rest of the budget, 75 a month, and you don't add any more money at all the rest of the 35 years, right? Then at 12% average rate of return historically, that's 487,000 that you can have cash and still keep your insurance if you want to, or add more money to your investments over time. But that's on top of what you already have saved up, okay? 300,000 on each of you would not require a medical exam, but everything else being equal though, would that be 78 on you, Tia, and 84 on you, Peter? Investments are the same. And then the bare minimum I feel comfortable with you having if you wanted to even go lower, 275,000 on each of you is the bare minimum I feel comfortable with because you guys do have 3 children. That's $72 and $87 a month each. If you notice, the investments are the same because you can always add more money to investments, but you can't just always qualify for more insurance. Do you know why?
No.
How do you get sick and you think of
Exactly. Most people wait till it's too late, isn't that right?
Yeah.
So we want to lock in when it's the earliest. That way we can pay the least and also have more time to save too. Does that sound fair?
Yeah.
So which one do you feel is the best one in your budget? Do you feel comfortable covering your family with?
The first one.
Okay, perfect. So this one right here?
Yeah.
Awesome. So the only thing I need from you guys is your ID, and then that way we can see if you guys qualify. Yep, and sometimes in between they have questions, but that's as simple as it gets. Yep, any questions? Good job, Peter and Tia.